You might think a 1% drop in mortgage rates doesn't matter much, but what if I told you that it could add tens of thousands to your buying power without you earning a single extra dollar? Stick around, because once you understand this, you'll see home shopping completely differently. Hi, I'm Jonathan Wells, a mortgage lender who helps people turn their goals into game plans. And in this video, I'll show you exactly how lower mortgage rates can boost your pre-approval, stretch your budget safely, and even help you lock in a home that felt out of reach just a few months ago. So if you're serious about qualifying for a home, fill out this free questionnaire below to see just how home ready you are. Now, let's dive in. Before we get into the numbers, let's start with a picture you've probably lived through. You're online, looking at homes, and you keep running into the same issues. Every home you love feels just a little bit out of budget. You plug in the price, you check the payment, and you think, well, dang, that's close, but not quite. Then rates drop by even 0.5%, and suddenly, bam, your dream house might actually fit. Why does that happen? Well, here's where things get fun. When rates drop, your monthly payment for the same loan amount goes down. But here's the twist that most people miss. Lenders qualify you based on your monthly payments, not your total loan size. That means that when the payment goes down, your max approval goes up. Let's use a real example. Say you're approved for a $300,000 loan when rates were 7.5%. If rates drop to 6.5%, your monthly payment could fall by roughly $200. And that $200 difference could qualify you for nearly $30,000 more in buying power without any extra income. And that's just from a single percent drop, which is wild, right? By the way, if you're finding this video helpful and you want more mortgage tips that actually make sense, hit that subscribe button right now. I post new breakdowns every week. Now, back to it, because this is where people get stuck. A lot of buyers, they wait on the sidelines for rates to fall before they even get pre-approved. But here's the problem. The second that rates drop, every buyer waiting on the sidelines all jump in at once. And when that happens, prices, they move fast. So instead of saving money, you end up competing harder and likely paying more. That's why I always tell my clients to get pre-approved now, not later. You can always update your approval if and when rates drop, and I'll even rerun your numbers. Automatically when they do. But you can't win a home that you're not qualified for. So if you want to play with this for yourself, grab my free download. It's a buying power calculator, and it lets you plug in your income and see how much home you can afford based on different interest rates. And it's linked in this video below. All right, now let's go a level deeper. Most people think that a lower rate equals a lower payment, and they stop there. But it's not just the lower payment, it's what the lower payment represents. It means that your debt to income ratio improves, and it means your affordability score increases. And it can mean the difference between a loan approval and a denial. That's why a small shift in rates can turn a maybe into a yes. Here's a story to bring this to life. A couple I worked with, let's call them Mike and Jasmine, were pre-approved for $310 last spring when rates were high. They were patient but frustrated. Every home they loved was in the 340s. We set a rate alert for them, and when rates dropped from 7.25% to 6.5%, we reran the numbers. Their new approval jumped to $345,000. They found their dream home, and get this, their payment was still lower than before. That's the power of timing your loan the smart way, not the lucky way. And if you're wondering, okay, well, when should I actually buy? Here's my honest answer. The best time isn't when rates hit the bottom. It's when you can afford the payments and feel comfortable about your budget. Because you can always refinance later, but you can't rewind the clock and buy a home before prices rise. Now, let's pause this for a second, because this next part will surprise you. Sometimes lower rates don't just raise your pre-approval, they change how lenders see your entire profile. Because when ratios tighten up, you might suddenly qualify for better programs, like lower down payment options or cheaper mortgage insurance. And that's a double win. More house and less cost. So when people say, I'll just wait until rates drop, I say, great, let's get your plan ready now so you can strike at the second they do. Now, if you haven't already, fill out that free questionnaire. It's quick, it's free, and it tells you exactly where you stand right now. We'll even run your numbers at today's rates and again if they drop, so you can see what your new buying power is. Now, here's something else that's very important. The average buyer thinks they need to wait for rates to drop by a full percent to make a difference. And that's simply not true. Even a quarter-point move can change your pre-approval by thousands. And with creative loan strategies like paying points, temporary buydowns, or refinancing later, you can get the best of both worlds. So, what's the takeaway? Well, lower rates don't just make homes cheaper, they expand your options. They give you flexibility, and most of all, they give you the confidence to shop smart instead of shopping scared. So here's a quick recap. Lower rates means lower payments. Lower payments means a higher pre-approval. And a higher pre-approval means more options, faster wins, and less stress. If you want to see your real numbers, grab that free buying power calculator below. Now, I'd love to hear from you. What price range are you currently shopping in? And what rate do you think would make you say, well, I'm ready? Drop it in the comments below and I'll run a quick estimate for you in a reply. Oh, and before we wrap up, I do want to answer a quick question from my comments last week. Does refinancing later hurt your buying power today? And the short answer is, well, no. In fact, looking for a home now and refinancing later often builds equity faster than waiting, because your home appreciates while everyone else is waiting for that perfect rate. And listen, if you liked this video, you'll love the next one. I'll see you there.